Hi Fools, welcome to Market Checkup, the Motley Fool's healthcare focused investing show. I'm David Williamson and I'm joined as usual by Michael Douglas. How's it going, Michael? You have a good weekend?
Absolutely.
All right, well let's get right to it. We have a jam-packed show. We have some more merger and acquisition news, one that's happening, one that could be happening. We have, unfortunately, a pretty big loser. We also have some earnings we need to cover. From a big biotech stock, so I encourage everyone to watch the whole show, not just skip to your favorite parts. But let's start with our big mover. Unfortunately, it's Oncogenics. Shares are down about 50%. Michael, what caused shares to get cut in half?
So they have this drug called Plzer, which was supposed to basically help improve median overall survival in prostate cancer, and when combined with docetaxel and prednisone,
which is essentially chemo,
right? And basically, it missed.
Yeah.
It missed. The p-value was 0.21, so this wasn't even like a 0.06, just slightly missing statistical significance. This was a big miss.
Yeah.
And overall survival was only improved at the median point by 1.2 months, 23.4 to 22.2 months. So, just not. Bad news.
Yeah, it's a pretty big impact. You know, it's sort of interesting though to see their partner Teva not affected at all. Shares are actually, I mean, they're essentially flat. They were actually up technically a little bit at the time of this filming. So, you know, I don't think Teva investors were really counting on this drug contributing to the company. And when you take a look at Oncogenics right now, you see, okay, well, they have this drug. They're testing it on a couple cancers, and certainly failure in one cancer type doesn't mean failure in another. We've seen that with Sutent. Cyramza is a good example of that. But, you know, it certainly doesn't, you know, investors certainly get nervous when you just essentially bomb, you know, one of your late-stage trials. Now they have another late-stage trial coming up with this drug in non-small cell lung cancer, and they have a second cancer drug in their pipeline also in mid-stage studies.
Right, Apatorsen, and it's got a couple of studies, Borealis 1 and 2, reporting out, at least in theory, in June of this year, and then some coming out in 2015 and 2016. So definitely something investors will want to watch.
Yeah, I think given the, you know, the incredibly low market cap, I think there really isn't a whole lot of confidence in the market for these drugs, for Oncogenics' pipeline. This is not a stock, you know, I wouldn't be surprised to see it run back up as these results, you know, get near coming out, but I don't think that's something investors should bank on. Yeah. And so I don't think this is a bad news buy. I think this is a stay away. You can put it on your watch list. You can see if it runs up, but I don't think you should be, you know, you should be in the game. I think this is more of a stock you want to stay on the sidelines for.
Well, and there are just some much better areas for your money, as I think we'll talk about later in the show. So.
Yeah, absolutely. All right, well, let's move from some bad news to some good news.
Yep.
For good news for Furlex investors, shares are up nice today, and it looks like Forest Labs is going to buy Furlex, which it's kind of a bit like a Russian nesting doll to me. Or when you see like the small fish get eaten by the middle fish, gets eaten by the big fish, because Forest itself is getting bought by activists. Right. After Carl Icahn just cajoled for seemingly forever to get someone to buy Forest. Activists, though, they're paying a lot. You know, they're paying over $20 billion for Forest. Forest itself is paying $1.1 billion for Furlex. They're getting an IBS drug. They're actually going to sell off 2 other drugs for $415 million to Royalty Pharma. What do you think about this deal? I
mean, overall, I think it makes some good sense. I mean, this IBS drug that they're looking at, the data look pretty good. You know, in terms of, you know, they met the formally agreed upon primary endpoints with the FDA and the EMA for composite response based on improvements in stool consistency and abdominal pain. So that's good news there. And also, to some extent, since Forest Labs already markets Linzess for another type of IBS, potentially you're going to be marketing to similar doctors, not the same doctors, so that's a pretty easy call for the sales force.
Yeah, I think it's a good fit for Forest in that sense. I also think it's a good fit for activists. I think it really gives them a nice GI product line. You know, this is a deal you assume would be made with activists' consent. Yeah. You know, legally Forrest could absolutely make it. I suppose if management was bitter about the buyout, but you would expect that it's been talked over.
Yeah, and I think they indicated that activist was pretty happy with it as well.
So yeah, no, I think it was a good purchase. I think it's kind of a happy ending for everyone involved. You know, I think activists may have paid a little much for Forrest in general, but you know, this Furlex edition, it's interesting to me, and I like how they monetized what they weren't as interested in.
Right.
That was Furlex's as well.
Well, and you know, they still have royalties on Oseni and Kazana, which are both in type 2 diabetes. They're DPP-4 inhibitors with Takeda. So, you know, there's some potential royalties and milestones there. And they've got a couple other things in the pipeline. J&J Q2, which is a broad-spectrum antibiotic for bacterial skin infections, and then trilagleptin for type 2 diabetes, and that's also being, that's in phase 3 in Japan with Takeda as well. So there's some opportunities there, potentially.
Potentially, yeah. So good pickup?
Yeah.
Yeah, I think so too. All right, well, let's go to what was a sensible pickup to what is potentially an enormous pickup. It's definitely causing some concern. You know, I've seen some downgrades. Of course, we're talking about Pfizer and AstraZeneca. Pfizer's back.
Right.
I've seen some concerns. People have downgraded Pfizer. I don't know if it deserves to be downgraded just for being interested, because I think we'll dive into it. It actually could be kind of interesting for Pfizer. I've really been thinking. It caught me off guard when the story leaked a little while ago that Pfizer once had interest in AstraZeneca because you thought really big deals were from a bygone era, these mega mergers, and it didn't necessarily fit what Pfizer was doing, which was downsizing, cleaving off extra divisions, setting up in 3 separate units to potentially spin off, you know, an established product's a slower growing unit. But it turns out we got a little more info today. Pfizer really approached AstraZeneca in January about it. They were rebuffed. Pfizer has come back, basically, not with a firm offer yet, but they want discussions with AstraZeneca. They had a conference call, which was sort of like a come meet with your new overlords conference call. I like that part where it was, you know, AstraZeneca investors may not be as familiar with Pfizer, but
so we'll tell you
all about us.
Employees.
Yeah. But it was a really interesting call. You know, I think it really kind of comes down, and we should probably talk about all 3 of them. There's 3 attractive things. Potentially the tax benefits for redomiciling in the UK, the overseas cash that they would use for the deal, and how AstraZeneca fits in Pfizer's new 3-division layout.
Right. Well, and I think, I mean, UK lower marginal corporate tax rate, so that makes sense. That's easily mentioned. Yes, that is definitely a plus, and something that they brought up.
Yeah.
And then secondly, yes, is that
although if Pfizer really wanted lower tax rates, they should go buy an Irish company. Right?
Yeah. Is Shire a take it? No,
yeah.
I'm just kidding. But you know, secondly, as you pointed out, there is that benefit of some of this cash not having to be repatriated to the U.S.
Yep.
And then.
And we saw this with Johnson & Johnson and Synthes, right? They used a lot of their money that was trapped overseas to make an acquisition there.
Right.
And you really get, essentially you're getting more than what your money's worth, right? Because if you had to bring it back, you'd lose a chunk of it to
20% or however much.
To taxes, yeah.
Yeah. So I mean, looking at those 3 sort of operating segments, I guess I'll talk a little bit about those first, and then we can kind of look at the benefits. So the 3 segments that they're talking about organizing into. The first one is, you know, core assets that are going to be have market exclusivity beyond 2015 within a variety of areas. We're talking immunology, inflammation, cardio, metabolic, neuroscience and pain, rare diseases, and women's and men's health. The second one, vaccines, oncology, and consumer health. And the third one is this sort of established pharma business. These are drugs that are expected to lose exclusivity through 2015, include some sterile injectables, branded generics, orphan drugs, and some biosimilars. And so the benefits by business that they're seeing are, you know, there is, of course, the diabetes benefit, right, for that first business that we're going to see with cardiovascular and diabetes. So there's some opportunity there, and in immunology as well. For the oncology business, and this is something that you and I have speculated on before, at least off camera, if not on, that maybe this is Pfizer admitting, well, you know, maybe we should have gotten into immuno-oncology a little bit earlier.
Yeah, they missed the boat a little. I remember when that first came out, and everyone, because Bristol just rocketed to the moon, and all the calls were, so tell us about your immuno-oncology pipeline. And Pfizer was like, well, we have some, you know, next generation immuno-oncology things we're working on, you know, sort of like preclinical. So I think they, you know, they just they kind of missed the boat, and this would be a way for them to get in the game big time because AstraZeneca has that PD-L1 drug, which is really exciting.
Right. Well, and they were explicit about immuno-oncology would be a nice benefit for this particular business.
Yep.
And then the third one, of course, with the established pharmaceuticals business, they noted, and something you and I've talked about before, that AstraZeneca's got some good presence in emerging markets. So it's a potential. These would be drugs that are coming off patent. So you're talking your Crestor and things like that, and a lot of cash flow, and could have other opportunities, sort of leaving that business pretty flexible and able to pivot with basically a fair amount of cash and revenues coming in. So, there's some good opportunities.
And
there.
A potential spin out later.
Yeah.
I think that it would be a way to essentially bolster all three of their divisions, and then decide how they want to break them apart, if they want to keep two together, if they want to get rid of some of those established products, where the margins are lower, where they can focus on being a low-cost provider in emerging markets and still scaling up and getting a good business. It would be funny though if they broke it into three divisions and named them Pfizer, AstraZeneca, and Wyeth, though, right?
Make you wonder kind of why they put it all together in the first place.
Speaking of Wyeth, I did notice that they, on the call it came out that they had over $4 billion in synergies with Wyeth. The final number was never really known. Pfizer's management is really adept at wringing out synergies. They're not a company where they talk about it, but it never really materializes.
Right.
So, unfortunately, synergies also often means people lose jobs, and I think that's why you're seeing a lot of speculation now for white knights and maybe more of a merger of equals approach. The names that I've seen thrown around are Amgen and AbbVie. I think they're both a little interesting. They both have oncology divisions. Amgen's is sort of a little newer. They bought Onyx to really beef that up. I think of the two, I think AbbVie may need it a little more. I think that's a little more interesting. They're both pharma companies, essentially. AbbVie's got a little more biologic experience, maybe. But for the most part, I think culturally, it's probably a little more similar to AstraZeneca. And it could be, obviously, they have the Humira overhang as well, so that would be a way to really bolster a longer-term pipeline if you're AbbVie. It'll be interesting to see, though, if someone else jumps in and tries to go toe-to-toe with Pfizer on this.
Yeah, that would be interesting. Well, and especially since AbbVie's got so much, I think, riding on the hepatitis C area right now, that would be a nice opportunity to diversify that risk a little bit.
Well, especially if hepatitis C doesn't work out the way they
are hoping,
because certainly there's no shortage of players, and there's going to be a lot of competition, and there's pushback on pricing. So we'll see how that turns out. But given its concentration right now on Humira, on hepatitis C, it might make sense for them to broaden that base and consider a merger of equals.
Yeah, definitely something we will want to watch.
We will be watching.
I know we've talked previously that we're kind of sometimes the Obamacare Sovaldi show. It feels like we're kind of the Pfizer AstraZeneca speculation.
Yeah, we're the mergers and acquisitions show. That's what we're covering. But it's not all we're covering. It's also earnings, right? And we had a lot last week. We also had Biogen, which recently reported first quarter results. Kind of mixed. The stock was flat the day it reported, but it's actually sold off every day since. Part of that's a broader market issue.
Broader healthcare issue.
Certainly healthcare. But let's talk about the numbers first, and then maybe also take a look forward.
Sure. So we've got $2.1 billion in revenue, which is a 51% increase.
It's about 7% better than what analysts expected.
Right, and a lot of that was driven by Tecfidera in multiple sclerosis. Pulled in $506 million, which is a reasonably good number.
Analysts were looking at about 535, 540.
Right, so a slight miss, but pretty close.
Yeah. Better. Slight beat. It was a beat.
Oh,
435. 435. I said it wrong.
I was like, oh, well, okay. Slight beat.
Your math is better than my memory.
Non-GAAP earnings per share of $2.47, which is about a 25% increase.
Yeah.
And they're just beginning that ramp for Tecfidera, so there's more opportunity.
They missed earnings per share by 8 cents. It came in at what, $2.47?
Yeah.
And I think that was slightly obscured by 2 deals they did. I dug in a little bit. They had a deal with Eisai. They had a deal with Sangamo. This totaled about $150 million. Biogen gave a heads up. They said, look for about $200 million in deals this year. So Wall Street analysts, took $200 million, and as they're wont to do, would do 50 for Q1, 50 for Q2, 50 for Q3. Obviously, it didn't hit that way, right? We had about 150 in Q1. So I think that kind of threw off what the street was expecting, which sort of made it miss.
Sure.
And then when you back that out, you take a look at operating margins. They were stronger than what was reported by a good chunk once you take that out. So I actually don't think it was a bad quarter at all by Biogen. I think Tecfidero's launch is really what's important, and it's kicking a lot of tail.
Yeah.
And I think you take a look at management, they raised guidance, right? So I think that shows a lot of confidence. They raised it by 200 to 275 million.
Yeah.
So
26 to 28% revenue growth is nothing to sneeze at.
Nothing at all. And earnings per share by a midpoint of 30 cents per share, and that's off better than anticipated Tysabri and Avonex strength. So it's not just all Tecfidera too.
Yeah.
I think when you look at Biogen though, because I want to take a look forward here. It's gotten beat up a little bit, but I actually think this is a stock that's got a ton of potential. It's one of my favorite names in healthcare. Their pipeline, there are a lot of home run swings in it. If any of them hit, that would really make the stock extremely interesting. But I think we have a lot of fourth quarter potential. They have trial results from Lingo. They have the underappreciated Plagrity has results coming in the fourth quarter. Tecfidera has a follow-on trial. Right. So I think there's a lot to like. I think the EU Tecfidera launch is going better than expected. I think it's going to run over 400 million. So I think this is a stock that really could bounce back in a big way. I don't think, obviously the market has to get a little more favorable in general to some of these names, but I don't see why it can't run all the way back up to the $400 range.
Right. Well, and don't forget the hemophilia.
Oh yeah.
There's some good opportunity there. Potentially Alprolix and hemophilia B just recently approved in the U.S. and Canada. And the peak sales numbers I keep saying are about 400 million. And of course you've got Eloctate hopefully in hemophilia A for up to, again, the number I keep seeing is about 500 to 700 million. So
yeah. That's nothing to sneeze at. Yeah. I know we're getting used to these gigantic numbers. I mean, we saw the Sovaldi launch. Tecfidera, right? I mean, they did 500 million for the quarter, and you're like, what's peak sales 500? Right? Yeah. But that's a real drug. And it adds up quick. You get a couple of those type of hits, and
just need a few base hits to support some home runs.
Exactly. So I think it was I think some people called it mixed. I was pretty happy with Biogen's earnings overall.
Yeah, I was too.
But we will keep watching earnings. So stay tuned to Fool.com for all your healthcare news, earnings, more mergers and acquisitions. Michael and I will be back tomorrow. And thanks for watching Market Checkup and Fool On.